Hello, everyone, and welcome to the HUBB U.S. market update as we wrap up the first quarter of 2023. Like we do every Friday at 5 p.m. Eastern Standard Time, we welcome back Rob Roy, the Chief Market Strategist at Elliott Wave Options. How are you, Rob?
Good, Dux. How are you?
I'm good, mate. Really good, except for the husky voice.
Yeah.
Rob's going to be using HUBB's software platform, and that is the charting software that you'll see during his analysis, and you can check it out at hubb.com, which is linked below. So make sure to go check that out. As I said, Rob's going to be breaking down the US markets for you, and considering the week we've had, it seems pretty quiet and dull versus like we haven't heard of a bank collapsing or anything like that. He's going to be looking at the S&P, the NASDAQ, and the Russell Index. I'm looking forward to hearing what he has to say about the VIX. And then we're going to look into Rob's stocks of interest for the week. He's going to be looking at Bitcoin. He's going to be looking at the Tesla, the renewable energy spaces, NEO, and stocks like that. And also his favorites like Apple, Amazon, Google, NVIDIA, and don't forget silver ETF he's been looking at. Don't forget, put those questions in for the Q&A at the end. Rob's going to get to those questions. And don't forget to click on those subscribe and like buttons below. Every single one of those helps. All right, let's get into the show, Rob. Talk about the US markets to me.
Thanks. And welcome to this week's live US market update. It was a fairly quiet week. There's a couple economic reports that we'll reference here in just a moment, but in general terms, a little bit more of a quiet week. Important thing to look at here is this triangle that we talked about in last week's broadcast, and I left it open for debate on whether one wanted to call this a descending triangle or a symmetrical triangle. In the end, it doesn't really matter. It's just a triangle, and we're going to have a breakout. But I think it's pretty clear to see that this was actually a formation of the symmetrical triangle, and we did get breakout with follow through. And so when you see that, and I think you can draw this line right over here, and I'm going to doji right there in the point of the triangle, and then clearly you can see this upward breakout. So when you see that, you want to look at volume. And this is a little bit of a concern, I think, that this breakout has not been supported by volume. That's not unusual to see a vertical move come out as breakout of a triangle or break of a moving average, whatever, on lower volume, but then the volume needs to kick in at some point. So far, that hasn't happened. So it leaves you a little concerned on whether or not this is going to continue to the upside. The economic reports that we did have on Thursday, we had the jobless claims number that came out. And if you take a look at the jobless claims, Brendan, if you could jump that up for me, we could see that the jobless claims number was slightly higher than expected. And when you're looking at a number being a little bit higher than expected on the jobless claims, you think, all right, that's a positive, right? Because the Fed has said their mandate is they are going to hurt the jobs market. That's one of their things. The job market is too strong, and they want to slow that down. So a little bit of an increase in the jobless claims, I think, is pretty warranted. And then they also had fourth quarter GDP. Final revision, because they revise the GDP number like 18 times when it comes out. I guess they just massage it till they get it where they want it to. And so that came down from 2.7 before to 2.6. So a slower fourth quarter. And then now all the rhetoric is, oh yeah, but we're going to be above 3 for this quarter. And it's been back above 3.2. And do they know that already? We're just finishing the quarter, last trading day of the quarter. Nice update on the last trading day of the quarter. That also leaves you a little bit suspect. Is that just, all the investment managers wanting the market to move to the upside so they get their quarterly bonuses in line? So it was a nice move to the upside. I just think that we still have to be just a tiny bit cautious on that move. From the Federal Reserve's standpoint, they released their PCE indicator today, and that's their favorite indicator for inflation, personal consumption, expenditure. So that's the PCE deflator is what it's really called. And it's just like, they can't look at the regular CPI and PPI like everybody else does. They have to have their own favorite inflation indicator that they look at. And that showed that things were down a bit. Inflation had cooled a little bit lower than what the expectation was. So are they getting their job done? Is inflation cooling off? Is the market starting to look ahead towards potential rate cuts. I know there's a lot of speculation back and forth on that. A lot of people think that's not going to happen. But the bottom line here is we did break out, albeit on lower volume. We've got a positive 1030 cross. That fuchsia colored line is the 30-day moving average. The lime green is the 10. So we crossed there. We're above the 50-day moving average. So a little bit overbought. One of my rules is no security in any time frame gets very far away from the 10-day moving average, and you can see there's a little bit of separation there. So yeah, if we can follow through with this at the beginning of the week, I just wouldn't be surprised to see a little bit. You don't want to see too much of a retracement, but a little pullback perhaps. And the fact that we've gotten above 400 is important, but the big number is going to be if we can get above 410. If we can move above 410, which we haven't been in quite a while, then that would be pretty impressive in my viewpoint. Looking at the 10-year real quick on interest rates, 5-wave to the downside pattern has been labeled now. That had not been labeled the last time we looked, so we were in corrective mode. So interest rates moving to the downside, I think, is okay. I'm a little nervous about if we break this area here. I would rather see interest rates stay in this trading range, and I think that's okay even for tech stocks. It's just if we break this, the speed in which it goes to the downside. If we start to get interest rates tanking, then we can be concerned about where is that money going in, right? Bonds prices go and yields go in opposite direction. So prices going up, yields going down. If interest rates start to drop like that, where's that money coming from? Is it coming out of the equities market? So be concerned a little bit about that if we drop too much, but a break of interest rates, a lot of you be saying, well, that's good for the market. It is, as long as it's not a fast move to the downside, indicating money flying into bonds. In my opinion, there's been a lot of money moving into money market because of the banking sector. The money market inflows have been off the chart. So is that going to continue? You could look from another standpoint of we have this low volume break because of all that money that went into money markets. And if all that money starts to come back in, is that when the volume kicks in and supports an upward breakout? It's all really interesting stuff, I think, even though it was a fairly quiet week compared to what we've had in the past. There's the dollar still in that 5-wave to the downside pattern. Not much else to talk about regarding the dollar. You can see that there's the support level. I'm fine with the dollar moving down here. I just don't want to see the dollar break 96. We don't want to get into a point or, getting all the conspiracy theories in there about currencies and stuff. It's not even worth really mentioning. But as long as the dollar stays fairly strong, and for me, that's above 96, I wouldn't be concerned unless it broke below that. But staying above 96 and coming down, I think that's a positive. So perhaps we're massaging a sweet spot here between rates and the dollar to be quite helpful. We'll see. And then taking a look at the Dow on the DIA, you can see that we have this little bit of a triangle here. And talked about this with our subscribers last night in our insiders meeting, that was a small triangle. Clearly, that is not the same pattern that we had in the SPY, but check this out. We had this downward zigzag pattern here on the DIA, right to the 100% level, spot on it, nailed it. So as LA wave Fibonacci added again, and then an upward zigzag pattern here, right there. And look where we are. We've extended to the 161.8% level. So is that going to be an area of potential resistance? We do have some consolidation right there, congestion, if you will. Getting back above 330 was key today. Looking at the moving averages, once again, just a tiny bit overbought. So perhaps a little bit of softness to start the week. And then we find out, does the volume come in and support this? The most impressive market, as it has been, is the Qs. And just this great 5-wave, LA wave pattern to the upside here. So the software is so good on LA Wave. I think it's the best LA Wave software that exists. I've tried all the ones that I know to exist, and it's just been amazing. So there's the Wave 5. It's labeled, and we're almost into this projection here, the time and price projection. So I think that the Q's getting above that previous Wave 3 and having just a little bit of a pullback there. We hit it, we bounced off of it, but we've broken back above it. Once again, looking at the moving averages, a little bit overbought from the 10-day moving average, but making a pretty strong move to the upside here. I think the open on Monday is going to be interesting because that's the first trading day of a new month and a new quarter. And that's when a lot of new money goes to work. So I wouldn't be surprised if we open to the upside on Monday, but then can we hold it? That'll be the key, I think, as we go through looking at the Russell, holding that 170 level. If you want a signal of the small caps, they have not been participating. Notice that chart does not look like the other ones with the movement to the upside, but the positive is we are bouncing off of 170 and not really, not much matters on the IWM until we move back up and start to get above or get at least close somewhere in the area of 190. So if we take a look at the VIX to finish up our market analysis, this is a little bit of concern, right? From a sentiment standpoint. So we see that we have the VIX all the way back down here, right at the bottom. If we are going to continue higher, like it looks like we're trying to break out of that triangle on the SPY, where is the room from a volatility standpoint? You all know that usually the VIX goes up when the market goes down and vice versa. There is a little bit of theory. The VIX is supposed to be an indicator of volatility. It's just the markets are normally more volatile to the downside than the upside, but it isn't supposed to be an indicator of fear and greed. It's supposed to be an indicator of volatility. My point here is it's very rare, but there have been points historically when the market has gone up and the VIX has gone up, and that's when you have a really strong move to the upside. Is there a catalyst to create a big move to the upside and tons of volume come in and the VIX doesn't tank down and go below 18? I think there's a small percentage chance of that, but it nonetheless exists out there. So I thought we would look at a sentiment indicator, and if you would bring up that chart, Brendan, for me on the investors survey that was published here on CNBC. And if we scroll down and take a look, the first survey that was done, I think this is really interesting when we're talking about sentiment, the S&P. Okay. Well, I'll go through and talk about it. So the S&P, the 68% say that there is more room for the market to fall. 68%. So now we're starting to look at opposites, right? Being a contrarian. We've already shown the VIX. Looks like, you know, we're down at the low area and we're likely going to have a move to the upside in the VIX, indicating a move down. But can we do that when there's that many investors that are saying that, hey, we expect the market to go down? 68%, 16% saying that it could go to the upside. The biggest risk in 2023 was a misstep by the Fed in inflation. So those are things they're talking about. And this one I think is really interesting. The safest haven right now. Guess what the safest haven is? Cash. Are you kidding me? Cash is the number one as far as the safest place. So there's their example of all that money that's been moving into money markets, as I talked about. That's a perfect example of it. So when you take a look at indicators along those lines, the sentiment seems to be extremely bearish. And then we have a low VIX, a bit of a dichotomy, I think. Which one's going to win out? You know, we talked all about this in our TradeFinder meeting on Tuesday night. And by the way, if you haven't attended TradeFinder before, we do it every Tuesday night. It's at 9 p.m. Eastern time. It's free. You can register here in the link or go to our website at ewotrader.com and register there. We talk about the markets. We look for trade ideas, and we have a live Q&A at the end. It's a lot of fun. We get great questions. We got a really good group that follows us. Love to have you sign up and join along with us. So TradeFinder, a lot of fun, but we did go through this exact scenario in Tuesday night, talking about, can the market continue to break to the upside with the VIX to the downside? Going to be interesting next week, I think.
Oh, 100%. And you and I have talked before about how we've seen those imbalances in selling over the last few weeks. Today, it was an imbalance to the buy side, $1.2 billion for month end. So maybe that trend you're talking about of buying starting the month could be around the corner.
It could be. And I think that the open, and not so much the open, but I think how we close on Monday is going to tell us a lot. And as long as we don't have a big give back from this little low volume breakout that we've had, I think it can hold. But boy, it's going to be interesting to watch it play out and see.
All right. So before we jump into your stocks of interest, don't forget to click on the likes and subscribes below, but also keep those questions coming in. Right? There's plenty of questions to ask on this market, trust me. All right, Rob, let's get into your stocks of interest. Now, I know you want to talk about Bitcoin because I want to hear about it.
Yeah, Bitcoin is, and that's, one that we get questions on all the time regarding Elliott Wave. Does Elliott Wave work on Bitcoin? Well, look at that chart and you tell me. The wave 4 coming down to the 61.8% level. That means that you're supposed to have a wave 5 at 100%. It couldn't be any more classic Elliott Wave Fibonacci levels. And where this tap box is, as forecast by the Elliott Wave algorithm within Profit Source, look where we've been, just bounding back and forth here, Dux, just right through that box since we made this big run. Now, I am a little nervous about this vertical move. Another one of my rules is vertical moves normally get retraced. So you go vertically up, often you come back down, you go vertically down, you come back up. But you have to be impressed with this consolidation. If you're long Bitcoin and long the cryptos, this is exactly what you want to see. You don't want to see a big give back. But I would just point one other note here is we had this vertical move and we consolidated for a while, and then we still retraced a lot of it. So I think you have to keep that in your back pocket. Don't get too excited about the cryptos and Bitcoin yet. But boy, this pattern, this 5-wave pattern that completed here was just spot on from Elliott Wave. And this, if you wonder, okay, well, what does it mean? Where do we go from here? When you have a completed Elliott Wave pattern like this, you do move into a wait and see mode. Let the algorithm analyze what's occurring from here and give us our best analysis of where we could go from here. So I think we're in a pause area here, but pretty impressive that we've consolidated the moves so well thus far.
Okay, let's move on to a stock that we had a bit of a big move today on some news. Nikola with their $100 million offering at a decent discount. So what does that mean for the stock?
Well, and we take a look at the chart, and how's that for an ugly chart, Dux? I mean, does it get any uglier than that? You're correct. They had to do a secondary offering, and in order to get their secondary offering filled, they had to go 20% down below their price, hence the gap to the downside here. So they've diluted the float by the secondary offering, and the fact that they had to go below $1.50, had to go down to $1.20 or something in order to get that secondary offering filled. Now, what they say they're going to do and is move into, they're going to use that money, the additional money, to move into hydrogen fuel cells. They got their electric trucks is what Nikola is famous for. So they're going to go in and start creating hydrogen fuel cells. I think that's interesting. Perhaps they're trying to do something different, distinguish themselves from Tesla's trucks, electric trucks, whatever. It's going to be really interesting to see how this whole area now of the renewable energy stuff starts to play out.
So talking about that renewable energy sector, we always talk about Tesla, but let's have a look at NIO as well. Don't forget Tesla on Sunday, they have their units, the delivery units, 432,000 is the consensus. But they also there was a strong buy put out today by CFRA as well.
They're hopeful of Tesla beating the numbers. And the fact you asked about NIO, here's a chart of NIO. We actually sent out an alert to our alert subscribers at EWOtrader.com, EWOtrader.com on NIO to go along. And here are the particulars. We're breaking above 10, which is really important from an investment manager standpoint. If you get above $10 a share, growth and income, the investment objective of growth or better can own those. So that could kick some volume in there. We have a positive 1030 cross here. A lot of market makers look at that. If you're wondering why are you showing that, because a lot of floor traders, market makers look at that. We are above the 50-day moving average, and the DMI is supportive. The positive directional indicator well above the negative, good separation. The ADX is above 20 and moving to the upside. So China's reopening. They also have an earnings report in the not too distant future, and I was reading some analyst reports on this. I don't get big into fundamentals. I'm more of a technical trader. We look at the charts, etc. It's never a bad thing to have fundamentals behind you. And there's a lot of speculation out there that they really lowballed the number, and the fact that their forecast was very low, that it could be easily beaten, and that could be a catalyst to move NIO up as well. So I'm glad you asked about that one. That one was news for us today. So we got Nikola, we got NIO, and
our favorite,
Where are we going, Ducks? We're going to look at Tesla, aren't we?
Yeah, we are.
Yeah, you're talking about look what happened today. So obviously there is some optimism about that number coming out Sunday that you just referenced. But from a technical standpoint, the key here is it broke above 200. It needed to do that, and it did. And you just got to keep shaking your head. The valuation on Tesla is so high. People love this stock. You say anything negative about it, then you get all kinds of hate mail coming at your way. It's like the most loved stock I've seen in a really long time. But my commentary had been, we talked about this in TradeFinder Tuesday night too, where I said it had to get above 200. Well, it did today. Now we have to see, do we get that follow through on Monday? And everything could change Sunday night, right, Ducks? I mean, depending on how that number is, you could see a big blast to the upside here, or you could see a retracement back down. Remember, you have to have a second day of follow through, a confirmation day. It is impressive that we broke above 200 today, but one day doesn't mean anything. We need that follow through on Monday. And if we get it, that likely means that the number was good. And who knows where Tesla could go from there. We are technically in a 5-wave to the downside pattern. You got to keep that in the back of your mind. But if we break above 220, we could disqualify this 5-wave to the downside pattern. Or is this indicating maybe that number isn't going to be so good? Say, this is going to be a stock to watch the beginning of the week for sure.
I hope Alpha Oscar, you're asking that question. Hopefully that clarifies or answers your question on Tesla. Now, let's move on the normal stocks that we look at. Apple, they had a little bit of small negative news with GM dropping their Apple CarPlay service, but we're not here for that. We're here to look what the chart's telling us.
Yeah, I couldn't agree more. And the chart's pretty impressive. So you could draw this line here right at 155. A lot of people say, that's the line in the sand as far as support resistance. You can see how it bounced off it back in October. We came back up again in February, tried it twice in February, moved back down. But we're in a well-constructed 5-wave to the upside pattern, LA wave pattern, 46% right at a 50% corrective move. So that wave 5 could go as high as 100%. I would say that's, probably getting around 170, maybe coming back towards these highs. And they have so much cash. I've talked about this before, is one of the stocks that I would always be hesitant to short no matter what's going on in the market is Apple, because they have so much money. And then there's speculation, are they going to buy somebody or whatever? So yeah, the negative GM news just didn't affect them at all, did it? I mean, it's just like, oh, so what? We'll go buy our own Apple products, right? We don't need their help. And so powering to the upside here, slightly above the 10-day moving average, but not a lot. But I was impressed with this move above 160. So somewhere in this range between 150 and 160 is where all the consolidation lies. I made a pretty good case for 155, I think, but breaking above 160, looks like Apple wants to head to those August highs. So yeah, pretty impressive chart considering.
Talk to me about Amazon. Listen, we all love using Amazon. We've talked about it a lot as well. How's that chart looking now?
The triangle that we talked about, look at that, we broke out, Duck. So we broke to the upside here, and it looks like perhaps from here that we continue moving higher. That's a decent follow through day. When you look at that, you're going to want to see volume as well. And here we have the same problem of low volume. So there wasn't much volume today. It seemed like this is more, we talked about this, there wasn't necessarily a ton of buying that was going on. There was a seller strike. Like the sellers just backed away. We'll let all the money managers have their end of quarter rally here so they can get their bonuses. It's like the sellers just walked away today. Did they come back? Are they gone? But I do think some of that money from money markets is going to have to come back in the market. We're going to have to get some volume at some point real soon, or I think these breakouts could be suspect. So we have the exact same thing going on here with Amazon. A nice looking breakout of the triangle, but can it hold? It also, with the market, is going to need some volume, in my opinion, but it did break out. Yeah.
And listen, the benefit, like we talked about Apple there before, who benefited from it? Google. So let's have a look at Google.
Sounds good. Pretty nice chart here. And I really like the fact that we see, here's one of those vertical things. And that made me nervous on Google, because here, another example, vertically up right over here, that occurred in January. So vertically up, what happens? Right back down. So those things make you nervous. And then over here, just to show you that it works in both directions, vertical move down, recovered, right back to the upside. So yeah, I can show you example after example of what makes me nervous about vertical moves. But this came back down. It did come back down some, and you had to look at that and say, oh, wow, is Google coming all the way back? Are we going back to 90? But it held there at 100, and that was pretty impressive. Obviously, we all know that 100 is one of those big round numbers, and I used to use the analogy Star Trek. My dad's a huge Star Trek fan. This tractor beam effect, just seems to suck the stock to those big round numbers like 100. But coming back down and holding it, Doji yesterday, break back to the upside today. That's pretty impressive as well. So, there's a lot, there's still nervousness. There's a lot of positives going on in the market with these stocks. And perhaps that negative sentiment out there is enough to keep this market moving higher.
Okay, a couple of questions coming in, seeing one and wondering what NVIDIA is doing. I've seen a couple of upgrades there this week on price targets as well.
Yeah, and it just doesn't, anytime I do any sort of a, whether it's insiders or the TradeFinder meeting or our live updates here, NVIDIA is just, it's getting close, I think, Dux, to Tesla as far as being so loved. Everybody always wants to talk about NVIDIA, and look at that chart. I mean, you can see why. How impressive is that move? So, and you look at the DMI, and it's just hanging there in the upper end of the range. It'll do that when the stock continues to run. That break above 240, I thought was key. We actually had two good bullish alerts for our alert subscribers at Evo Trader on this, and it appears that it got out a little bit too soon because we're out of both of them nice gains. But I thought when we were coming back here to this 260 level, there was a chance, and this is what I was looking for, and I may got a little too greedy here, but there was a chance we'd come back down and test that 240 level because it was resistance. It didn't do it. It held 260 and took off. So perhaps exited those a little bit early. You're never upset with gains, right? But man, just continues to impress. And as far as how far it can go, this could really run. It's already got this huge zigzag pattern that it's already an extended pattern, because you can see right up to the 161.8% level. Is that going to be it? There are stocks that'll go to 261.8. That's the next fib level. If people are wondering, can it do that? It's trying, but that's an extended level. And I thought it looked tired here last week, but it continues to power ahead and just awfully impressive on that move. But again, I'd be a little cautious here because of where we're sitting with that C wave extension at the 161.8% extension. But since so many people ask about this, Dux, I want to know what the viewers think. Where do you guys think NVIDIA is going to go? You ask about it all the time, so you're following it. Is this it? Does NVIDIA need to pause? Or is NVIDIA going to turn and continue to run more to the upside? I'd be really curious as to what our viewers think. Leave a comment underneath. If you're watching the recording, leave a comment underneath the recording on where you think NVIDIA is going. A pause now or just power higher?
It's actually Will's putting a comment in there now. Says it's hard to watch this bull run and make nothing, but you have to.
Well, at least we made a little bit, but it certainly exited a little too soon based on that chart. But nobody catches the bottoms or the tops exactly, right? So you take your chunk out of the middle and you'd be happy.
Well, looking at this market, these markets have had a good run this week. And we looked at SLV last week, the silver ETF. Are we still looking at it as fondly as we were last week?
For us, no, actually closed out a bullish alert on SLV for our alert subscribers today, since you mentioned it, and I think people can see why. That's, again, one heck of a run that we've had there. There's the separation between where SLV is and the 10-day moving average. So we're a little bit overbought short term there, and we have a lot of resistance right here at 22. All that consolidation that occurred back in December and January, I just can't see silver, or the SLV at least, powering through this 22 level. Perhaps it does, but normally when you try to break some kind of resistance like that, that's that strong, and you do it when you're already overbought, it doesn't hold. I really think SLV needs to consolidate here a little bit. I mean, that was the actions that we took today as well. So I feel like maybe we churn a bit here. Even a little bit of a give back wouldn't be so bad. You can see that this was a pretty good range of resistance, but I think maybe we get a little bit of a pause here out of the SLV.
All right, let's move on to Q&A then. And before we jump into it, once again, click on that like and subscribe button down below. Do us a favor. You love it. Now, if we don't get to your Q&As tonight, don't forget you can also go to the TradeFinder show on Tuesdays at 9 with Rob. He'll jump on there and answer any questions you've got there. But let's move into the questions we've got today. And we've got some doozies here for you, Rob.
Oh, great.
Let's kick it on with the first one. It comes from Hasta La Vista Barbie. He's got two. We'll get back to his stock later, but his question is, when is the recession?
That is a good question. So I still think it's coming. Let's just pop up a chart here. I'll go ahead and show the yield curve, which does look better. There's no question, but it's still inverted. So it hasn't recovered that, although it's getting better. And there's a lot of speculation that's out there. And the reason for this market move to the upside is the recession, he tried to say, is going to show up in the second quarter. That's when we're going to see it. The pundits thinking that we had such a strong first quarter. Maybe we did, maybe we didn't. I think that's speculation, maybe wishful thinking. But from all the commentary from the economists, that we're going to start to see signs of the recession in the second quarter. So we should start seeing it soon. And if we do, how severe is it going to be? I feel like it's going to be more moderate. I know there's still a lot of people that are in the light recession camp. I think it's going to be a bit more moderate. And could that prompt the Fed to start cutting rates sooner than a lot of people think? They don't want to repeat their mistakes of the 70s. Where they stopped raising rates too fast and inflation came roaring back. They don't want to do that. So, if we don't get a recession in the second quarter, then perhaps we do avoid one, or perhaps it's very light. I think we should start seeing signs here pretty soon.
All right, and then to wrap up his question, then he also wants to look at DraftKings. I also said Will come in after that one. Okay. And listen, they've just had March Madness, right? Maybe they've done well with all the upsets that have been happening in that.
That was wild, hasn't it been? We had talked about this a while back, and the same thing you just said, Dux, was I was talking about, if this stock's going to go up, this is it. You have just finished the Super Bowl not long ago, and now March Madness, two of their biggest events of the year, and then I guess we're not that far away before we'll start talking about football again. I don't know how the USFL or XFL or any of those are. I don't know if people gamble on those at all like they do the NFL, but it has made a move to the upside. It's got a well-formed 5-wave pattern. We did get some retracement from that vertical move. We held there right at the 50-day moving average. That's the royal blue line. It's moving to the upside. Getting above 19 was key today, I think, because there was some resistance there, and there's not much else in the way now for a potential run up towards the 24-25. So maybe as they start reporting earnings from the Super Bowl and the March Madness, as you mentioned, then that powers the stock to move higher. But that looks pretty good.
All right, the next one is from Alpha Oscar. He's got a couple of questions in here, but to close it all in, he wants to look at Oxy and also the energy sector. He's saying Buffett's buying heavily. He also is pointing out, though, it looks like it wants to break out of its descending wedge, OXY.
Yeah, he's right that Buffett did. He's just continues to add to it. One of his largest positions now, and it isn't it's in a well-formed 5-wave to the downside pattern. Oil has made a bit of a comeback. And so, in chatting with this, funny enough, we talked about this in TradeFinder as well Tuesday night. Do these stocks need oil to rebound to the upside? And I think oil's still elevated. So it's high enough in price, whether oil continues this little run that it had this past week or so or not. It's high enough, I think, for these companies to start making money. It is labeled because we're right at a 38% fib level. So that 38.2% fib level for me, just to summarize this, it's impressive that it held 60. It tried to break below it. It couldn't do it. It got back above 60. But for me on Oxy, and I know, when Buffett's buying, it gets people's attentions. But for me, it's got to get above 65 from a technical standpoint, it's got to get above 65. It's got to break this 4. It is above the 10, 30, and 50-day moving averages, but there's a lot of resistance at 65. But check that out. If it can get above 65, look, there's nothing in the way. Perhaps we're at 75 in a relatively short period of time. So for me, I would be sitting on my hands watching this. Can it get above 65? And then I would be interested in buying it. So that's how I feel.
Okay, a question here from Will on Home Depot. He wants to look at that. He's from the Northeast like myself, and there is building everywhere around here in home. So I understand why he wants to look at it.
Yeah, well, good day today too. So a good day to look at it. And you can see it powered to the upside coming off some support here. So, you know, these patterns that we're looking at, Dux, a lot of these stocks are moving off support, and that's normally a positive sign. So, you know, this could be one of those things where the market makes its move and then the retail traders come in, you know, FOMO, you know, they put all their money in money markets because they're afraid of the banks, and they didn't put it in the actual equities market. And then we keep moving up and then they come in at the last minute. That's what usually happens. But Home Depot with that move today, that's really an impressive move. We still got a gap here to get filled. I am a believer. We did statistics, 94% of gaps get filled, but you don't know when. Sometimes it takes a while. So it's not 100%, but gaps often get filled. Sometimes it can take some time, as we mentioned, but right where that gap is also resistance. So whether or not this stays in this 5-wave qualified pattern, the 4 is forecast. Look at that, right up where filling the gap is. So you could see a move in Home Depot at least up to this 310, 320 level, perhaps label that wave 4, fill that gap, and then we'd have to take a look at it again. But from now, it looks like that's where it wants to go. It looks like it wants to get up and try the 310, 320 area, especially with that move today.
How was the volume on that? Do you like the volume on that move up?
Yes, and that is the kind of volume that to me is supportive. I don't like these big, huge spikes, because when you get these massive spikes, that's when, okay, everybody that wanted to buy bought, or everyone that wanted to sell sold. And so then you normally get a retracement in the opposite direction. But when you have one of these bars where you have good, solid, above average volume, that's normally supportive. So that, in my opinion, is also supportive of Home Depot continuing up at least to 310 or 320. But we'd have to look at it again there, because there's a lot of resistance when it gets there. But yeah, one of the few stocks that had really strong supportive volume today.
I'm going to combine a couple of questions here from Asta La Vista Barbie and from Maddie. Is Asta La Vista Barbie saying, how do you see the banking issue? Is the topic already coming off the table, or could it come up again? And why I'm combining that is because there's been a lot of commentary in the last couple of weeks about the commercial real estate space being one of the next shoes to fall. Maddie wants to look at the chart for CBRE.
And, you know, talking about the banking sector, I think that it's not as scary as it was, because the Federal Reserve created this lending facility for banks to access, which is expanding their balance sheet. So that could also be playing into why we're moving to the upside here. They're not talking about it, and then they're jawboning that, oh, you know, banks need to have tighter lending standards. Be careful, market. You know, just because we made this money available doesn't mean the banks are going to lend it. I put this question to you, Dux. If you're running a bank and the Federal Reserve has created this place where you can go borrow money, you know, for next to nothing, are you not gonna, as a president of a bank or owner of a bank, are you not gonna start lending money again when you know that if you know, things get dicey, you have an avenue there, a fail safe, if you will, to go get money? So I think the Fed's trying to jawbone both of these. They're trying to take some emphasis away from their expanding their balance sheet by creating this, by saying that, hey, you know, the banks shouldn't lend. So are they talking to the banks, whatever? But to summarize here, the banking sector is definitely not as worrisome as it once was because of that, but it doesn't feel like it's over to me. I feel like we're going to get another shoe to drop here at some point in time. And it just, to me, matters, is it another regional bank? I don't think the market would care too much about that, but this is one of the big boys. Are any of those in trouble? But perhaps, you know, with that lending facility the Fed created, perhaps that has taken care of that problem. I still have that in the back of my mind that it just doesn't feel like it's completely done. Certainly a lot better than it was. And looking at CBRE here, nice hold of support there at 70. That's pretty impressive. And bouncing back to the upside, there's no 5-wave impulse pattern here. This is all corrective stuff. So there was a zigzag right there to the downside, which it completed. It's retracing. And it looks to me like it wants to come up and test this 80 level. Right there is where the next resistance is. It was a pretty vertical move lower here, so there's really not much, maybe a tiny blip here at 75 because there was some resistance from November and December. But 75 to 80, I think, it is a bounce, and then we'll have to see from there. But I share the concern about, because some people have gone back to work, but others haven't. And, at some point, it seems like that has to affect commercial real estate, that they just don't have the tenants that they once had. There's more vacancies. So that was a pretty good move down there, but it looks like it wants to at least try a short-term bounce.
Okay, we looked at the biotech space last week. XBI, Michael wants to look at XBI.
Okay. Kind of an area that we had mentioned is, not so much in the safety space for money to run and hide like McDonald's or Coca-Cola or some of those places. But once again, holding an area of support here. But this one, same kind of thing that when we looked at last week. The thing that makes me concerned here, it is impressive that it's held 75. That's a positive, but it's got a pretty tight ceiling here. It's got to do some work here, I think, to break above 80. Maybe it bumps its head there a few times. So perhaps we churn in this range between 75 and 80. If it could break above 80, I would have a whole different opinion. I just think the upside is quite limited here with all that resistance there. So this churn here between 75 and 80, some sort of a sideways trade maybe makes sense here.
I love this name, Mr. Japanese Aggression. He's got a couple names to look at. Caterpillar, and is CVS turning around?
We'll look at Caterpillar first. It's trying to hold. Caterpillar is here at 220, which was a spot where I felt like it needs to hold here. It did come down right to the 61.8% fib level there on the way forward. So that's a positive. It's not back above his 50-day moving average. We don't have a bullish 1030 cross either, but it did hold 220. It's trying to get back above there. But same kind of thing here with the XBI that we just looked at. It's got a tight ceiling here. It's probably going to bump its head at 240. So maybe we churn in here a little bit, a break above 240, and then I think Caterpillar's off to the races. It's suggestive that it may do that based on this pattern. But, the whole Missouri thing's got to show me, right? It's got to get above 240, but it was a nice hold at 220. It's got a good, strong fib level. I think, again, I would be cautious. Let it get above 240. Then I think you have a pretty good long trade there.
Okay, another one. The semis has been an interesting space. Micron, symbol MU.
MU, okay. I thought you were going to the SMH, but we'll look at.
We can look at both.
Well, we'll look at MU, and been kind of little blip against what everybody else did today, but it makes sense. Right? I mean, it's have to be a chart reading genius to figure out what happened here. All that resistance.
Good numbers.
Yeah. So we just. Boom, 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 keeps bumping its head around that 64, 65 area. A little bit of a vertical move there. It got there's one of my things that I talk about, too far away from the 10-day moving average. There was no way it was going to break above this area of resistance where it had been turned back twice previously when it was already that overbought. That's a perfect example of what we discussed earlier. So back off, reset. It was able to trade below the 10-day moving average and close back above it. So maybe we churn here a little bit, and then Micron can take another look at breaking above 65. So if you're long this, I wouldn't be concerned so much about what occurred here from a technical standpoint. I think it's right in line with what you would expect. It was overbought. It was at resistance, backing up a bit, churning through here, and then taking another run, I think is very constructive for a potential move higher. But again, for me to be interested in going long here, it's got to get above that 64, 65 area.
Okay, and do you want to look at SMH at the same time?
Sure, might as well. And see what the whole sector looks like. And pretty darn impressive, right? I mean, everything tech-wise has been working. The Qs and with interest rates, and if interest rates continue to come down, it's hard to argue that the Qs are tech stocks aren't going to continue to the upside. They've been the leaders. I think as we move into the Fed stopping their rate hike campaign and looking at some point down the road, whether it's the next quarter with bad recessionary numbers or whatever happens, I think tech stocks are going to look ahead. And then what'll be interesting is I think when we get to the point where the Fed really cuts rates, you know, a lot of people look at that as that, okay, they're cutting rates are going down. Now it's time to get into the tech sector. But remember, the market's always looking 6 to 9 months ahead. So the reason these stocks are going up right now is anticipation of that. And is buy the rumor, sell the news. Once they do start cutting, I think that's probably when you want to, get out of some of these tech stocks. So I think they're running in anticipation of that. The SMH is about as impressive as it gets. That's really strong. I mean, take a look at the DMI here. Wow. When you look at that looks like it's setting up for another run, Ducks. I mean, look, the ADX is broken above 20, which is key. The way I look at the DMI, good separation here. And as long as that run has been in the tooth here, the DMI is suggestive that it's setting itself up to take another leg higher.
That HUBB software makes it easy to really break that down quickly. All right, I've got two more for
without
it. Palo Alto, PANW.
Oh yeah, I'm glad somebody asked about that. I haven't looked at this one in a few weeks. Certainly one that I've been keeping an eye on, and it's on my radar screen. So kind of I'm feeling a little bit bad about this right now because of that move. I've been watching this consolidation. You could see that it was getting ready. Once again here, got a little bit too greedy on coming down to test this 180 level. I thought it might do that. Then if it does that, is it going to come fill this gap? It didn't do either of those. It held in this area from August and September back here, you can see. So it held that area and turned and moved back to the upside. You got a nice zigzag working there. I think this wave 3 likely continues, probably go up to that wave 5 target, and just kicking myself. When you've got one on your screen and you're watching it and then you feel like you missed the entry, that's frustrating. So I wouldn't be too upset with some sort of a little bit of a break. That was a big move today, though.
All right, thanks for that question, Will. And the last one we're going to wrap up with is Plug Power, PLUG.
Gosh, that's a blast from the past there. I haven't looked at that one in a long time. That was a common one a while back. It seemed like it was along the lines of NVIDIA. Everybody wanted to look at this because it's wild, right? It moves like crazy. You see all this stuff. That's why people were so into it, because it's volatile and it moves. Now the issue here is we broke below this wave 3 low. We did label the 5. We haven't quite made it to the tap box yet, which makes you a little bit nervous. The positive is it has held above 10. And if you break below 10 for too long, then those growth and income mutual funds and investment companies that have growth as their objective, they have to sell because they can't own single-digit stocks. Only aggressive objective institutions can own single-digit stocks. So it looks like they came in and supported it a little bit here so that we didn't break below that 10 level. So we're sitting right there at resistance at 12. You can see that was the low there back in December. If it could get above 12 here with a follow through, then I think you can make a good case that we're on our way back to test that previous 4, which is what should happen if we have a completed Ellie wave pattern here. So the wave 5 suggests there's potential to go lower, but we got that key level of 10 in the way, it looks like. So let's take a look at volume and see if there was any volume that came in here. Yeah, I guess we could say that there was some pretty decent volume that came in. You could see the increasing volume. That's what you want to see as we've moved higher here. The volume, although not above average, but the volume has been increasing. This seems like everybody took today off with the volume today, but that, if get above 12, and I think you probably have a move back up there towards that previous 4, but it has to get above 12 first, or you have to keep this in the back of your mind.
Everyone, great questions again tonight. I really, really love them. What do you think of the questions, Rob?
I think they were awesome because they were asking about stocks we haven't looked at in a very long time. It does kind of get old looking at the same stocks time after time. So it's great when we get some different symbols to look at, especially some that are like, wow, I used to look at that all the time. So good reminders. Other than the PANW one, because that was a negative memory for me because I missed that move today. But other than that, yeah, great questions, awesome questions.
Listen, if you have any more questions, don't forget Tuesday nights, 9 p.m. Rob hosts TradeFinder. Go see that. Rob, you have a fantastic weekend. This was a great show. Thank you so much.
I thought so as well. Thank you. And thanks everybody for watching. And I wish everybody a great weekend. Take care. Talk to you soon.
If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go.